Good evening, traders. Welcome back to the channel. This is Vishal, and you're watching Weekly Sectoral Analysis. Guys, last week I was busy. In fact, something extremely is going on at my place right now, and it might continue for next 1 or 2 weeks more. So that is the main reason why I have not been able to share videos with you very frequently, which I generally do in normal scenario. All right. But nevertheless, I'm back today with one more video of weekly sectoral analysis. So let's go ahead with it. We can see that Nifty currently is in an uptrend in the daily time frame chart and even in the weekly time frame chart, which is a good sign. But if you check in terms of momentum, if you check in the daily time frame chart, which is on the right hand side, we can clearly see that the candles are of extremely small stature, and if you can see, this entire zone is a resistance zone for Nifty. The coordinates are 19,925 to 19,841. So generally what has happened is market has shot up very fast. The way market has corrected, then suddenly this is a V-shaped recovery. Now there are generally two scenarios when there is a V-shaped recovery. Either after a very sharp pullback, market consolidates for a while and then it tries to give a new breakout, or else it will give a small short-term dip, and after the dip it will resume its prior trend, which is the uptrend. So what we can see over here, I'll try to highlight a zone for you. If in case if you try to dip further, the first support, the first important support, there will be many multiple supports, but an important support I guess will be at around you can say 19,630, 650. And on the upside, if this breaks, first of all, if this breaks, then the next support will come at 19,576 till a zone of 19,482. Okay. And on the upside, if this rally continues without giving a dip, all right, then we need to minimum close above this band, which you can say is a 19,950. Let's have a 30 points more, safe side for us. So if we close above 19,950, and if the bullish candle is even seen on the next day after a breakout, then it is even more confident sign for the bulls. In Bank Nifty, if you check, what has happened is market has recouped, it has given a sharp pullback, and suddenly it has fallen back. What we saw in Nifty is a different thing. What we saw is we are seeing a consolidation and there is more strength. But in Bank Nifty, the strength is lacking, especially due to SBI, the PSU banking pack. And after this sharp fall, this 50% retracement is obviously a decent support, which I have shared in my previous video also. From this zone of 43,305 till this 43,300. Okay, this entire zone was an important support, and you can see immediately we have seen a sharp pullback. But this sharp pullback doesn't mean something great, because if you see in the weekly time frame chart, there is nothing visible. This is a positive candle, a negative candle, again a positive candles. So generally when these candles are made in a between of a trend, if they are made at a top and bottom, it's a different thing. But if they are made in between and if they are being made consistently, then the importance of those candles diminishes. So according to me, we are still pretty much range bound, nothing great happening in Bank Nifty. And if you want to stay a steady buying, steady bullishness continuing in the banking stocks, we need to minimum close above 44,800. Yes, this is a pretty big rise according to you, I can understand, but that is a minimal requirement, because you can also see that there is some sort of resistance present over here, as this is the previous swing high. All right. Now let's have a close watch at the PSU banking pack. Well, PSU banking pack gave a nice sharp pullback, but then we saw a gap down and we can see selling visible in this particular sector. Now the main stock responsible for this sort of correction is obviously SBI, and weakness is persistent over here. Well, what we can see is in the weekly time frame chart, we have a small hammer over here. That is okay. Nothing great is happening. But if we break this 555 or 554 on a closing basis, we will immediately fall back to 542 or 540. All right. In the private banking pack, we have been bouncing from the last two trading sessions. The main bank responsible for this is obviously HDFC Bank. HDFC Bank is trying to, build a bottom sort of formation, and it wants to go up. If you check the weekly time frame chart, nothing great is visible over here. Prices are also below the moving averages over here. But in the daily time frame chart, as per the Dow theory, you can see this is the first correction, rise, again a correction, and this is the rise. Now, if you want to have a proper established uptrend, we need to minimum stay above this zone, which is 1580. Now, currently we are trading at 1532. If we close above 1580 and remain above that, what will happen is, as per Dow theory, we'll be making a first new high. And then after that, if we make a low, which is higher than this one, probably it will start confirming an uptrend in the HDFC Bank. But other than anything less than that is not acceptable for the entire stock to turn around on the upside. All right. Now, the second stock which has been trying to go higher is ICICI Bank. ICICI Bank is also trying to do the same thing, but I guess ICICI Bank is slightly more stronger than HDFC Bank. And the main reason is it has already been successful in making a higher low. Now we need to close above this zone, because this particular level, which is at 962, and this zone probably around 952, 953, it's very close. If you have a perfect close, something like that, I know perfect closes don't exist, but if you have something like this, then things can change a lot in ICICI Bank. But it will take some time. It will take probably a few days, maybe a week or so. So let's wait and watch what happens. And on the other side, if we break this particular level, then again things will be problematic for this particular stock. All right, let's have a look at the energy pack. In this stock, you can see, in this sector, you can see a steep rally on the upside. And in its constituents, if you have a look at Reliance, first of all, in the weekly time frame chart, stock was not that good looking, that great, but recently it has been closing of the dual moving averages. It has given this particular candle is pretty good, I guess, according to me. And somewhere over here, we are near a short-term resistance, I believe, right? So we are near a short-term resistance. If it dips down, okay, if it's tried to dip down and then if it tries to go up, probably it will be a decent chance for short-term momentum traders to probably time the stock for a bullish trade on the upside. But yes, you will only enter this stock if you have a breakout in the shorter term time frame charts. All right. And please analyze at your end. Don't just jump into the stock just because I'm saying that it should go up, should come down. Again, it should give a breakout. Only after the breakout, by putting your own analysis, you should have a look at the stock. All right. Now, there are a couple of other stocks which have rallied a lot. You can see the way the stock has rallied. You can see the way this stock has rallied. And probably both these stocks are extremely overstretched. You can see a negative divergence also in this stock. If it continues to rally, fine. It's fine. If you are a positional trader who's holding this stock, keep holding the stock with a trailing stop loss, even for BPCL. But as a swing trader, it needs to come down. It needs to consolidate. It needs to correct. And once the risk reward ratio is once again favorable for the bullish traders, only then I would like to enter this stock once again. Metal pack. Now, metal pack has been pretty surprising the way it has gone up, which I've also shared in my previous video. Now, one of the stocks which has looked interesting to me is Tata Steel. The way Tata Steel has given a pullback, you can see it has been able to bounce from a very good support over here. You can see this trend line support visible. And the way it has given a breakout is pretty good. But other stocks are not participating. If you check JSW Steel, if you check Jindal Steel and Power, if you check SAIL, all these stocks are not participating. But SAIL is one stock which I'm keeping my eyes on. And once it gives a big green candle, probably closes above 92 or 93, then I will start looking at this stock once again. All right. But overall sector is bullish. But apart from Tata Steel, other stocks should also participate. Auto sector. Now, auto sector, I have shared my analysis in my previous weekly sectoral video that this particular sector has surprised me by going higher. And one of the stocks which I shared in my previous weekly sectoral video is the same one. Ashok Leyland. Ashok Leyland has been able to give a very strong breakout over here. After that, it has been consolidating. If it moves above 180 to 183, I think the upside momentum will continue nicely in this stock. Finance Pack. Finance Pack is currently consolidating. You can see the way it has extended this particular swing on the downside, and this was the support 18,807, and just above that it formed the bottom. It's trying to go higher. What has happened is, in terms of Dow theory, this is the previous high. It needs to close above this high properly with a big green candle, and for icing on the cake, we also need to close above this high because there is a gap over here. So once we surpass all these levels, then we'll be able to see some firecrackers happening in the finance pack. Consumer sector, according to me, is in a decent uptrend in the daily time frame chart, but it is slightly overstretched. RSI is also well above 70. It needs to consolidate, probably come down, and once the risk reward ratio is favorable for the bulls, then you can start looking once again at stocks within this sector. But one stock which I have found out is Voltas. Now, Voltas is a stock which is hanging in between the bearish territory and the bullish territory. I guess once it closes above 870, then I'll start looking at this stock, especially for a bullish view. And if it closes below 806 or 805, probably there'll be some problems happening in this stock because it is actually trading within a rectangular zone. If you look properly, the only reason I'm looking at this stock is because of this horizontal pattern. And generally, after a horizontal breakout, things try to move very fast on the upside. FMCG pack. FMCG pack, you can see similar sort of rectangular pattern happening in the weekly time frame chart. But the main stock is not performing. It's not doing anything. ITC. ITC is still way below this zone. If it needs to, give a bullish breakout, it needs to close above probably around 458, 462. And on the minimalistic level, just to start looking interesting, it should close above 450 with a big green candle. Infrapack. Now, Infrapack in the weekly time frame chart, it's looking overstretched. Even in the daily time frame chart, it's looking slightly overstretched. Probably it needs to consolidate. It needs to go through some sort of profit booking. And once it comes down and the risk reward ratio is favorable for the bulls, I guess you can start looking at these stocks once again. IT pack has been able to give a very good breakout, but after the breakout, some sort of profit booking, yes, it is visible, and it might be it might be a possibility, a probability that the stocks might dip down first and then they will give a rally. And one of the stocks which looks interesting to me in terms of a positional view is this particular stock. Infosys. Positional traders should watch this particular stock and analyze at your own end, please. Pharma pack. Pharma pack, you can see in the daily time frame chart, what has happened is the sector is in an uptrend, but the recent last three candles are showing clear cut. You can see the sector is getting tired to go higher. The sector is rejecting higher levels. And even in the weekly time frame chart, shooting star is visible. So it is a probability that the next week we'll see some sort of consolidation within this sector. But one stock which looks interesting to me is Dr. Reddy. Yes, as of now, you can see this is the alert which I've kept in 5765, and exactly from that particular level, stock has retraced. All right, it closes above this level with a big green candle. Then, according to me, the positional trader should surely keep a watch on the stock. PSE sector needs some serious profit booking, some serious consolidation. As a swing trader, I would stay away. Once the sector comes down, cools off, then I would start looking at this sector once again. And same will go for realty pack also. You can see it's extremely overinflated. Even if I plot this Fibonacci extension, you can see right away that the 261.80 extension is at 719 and the price is at between 705 and 7023. So things are pretty overinflated, need some consolidation, need some correction. Once that happens, only then I would like to re-enter this particular sector as a swing trader. Mid-cap index, even same thing. You can see that sector is in an uptrend, strong uptrend. In fact, the daily RSI is well above 70. It's just around 73, 74. Needs some consolidation, correction, and once that happens, only then I will be able to, look once again at the look at the stocks within this sector once again. All right. But summing it up all, I guess, according to me, this is not a market where we can say that Nifty is in a bullish uptrend. Overall market is in a bullish uptrend and I will try to buy as many stocks as possible. The answer is no. Simply because recently market has just recovered from a short-term correction and it is still consolidating. It is still at a resistance. We seriously don't know what's going to happen. The first step towards understanding that yes, we are starting a new uptrend in the daily time frame chart in overall market is crossing 19,950 confidently with at least one day close, and the next day buying should be visible, and then slowly and steadily other sectors should also participate. Because if you look at the market right now, if you look at the bullish sectors also, sectors like IT or metal, like even in metal, I told the overall sector is looking strong, but only one stock has given a proper breakout, which is Tata Steel. If you look at Autopack, other stocks in Autopack have already rallied a lot. There is only one stock which looks very attractive to me, that is Ashok Leyland. If you look at Realty Pack, it is overinflated. In Infrapack, also there is probably one or two stocks. In Pharma, also there is one stock. So it's not a market where you will find 3 to 4 stocks in every sectors where you can park your money for the bullish trade. And whenever it's a time where you will find very, very minimalistic stocks in the market to park your money, it's probably a time to, yes, you can surely continuing to trade, but you should be a little bit careful, little bit thoughtful before you initiate any trades. All right. And please put in your own analysis and risk management and position sizing before you do anything. Trade well, trade wisely. Thank you.